Hi everyone, I'm Jay Law. If you missed the last major move in AI hardware stocks, that does not mean the AI investment story is over. In the next stage, the market may start rediscovering another group of overlooked AI infrastructure companies. Over the past 2 months, US equities have continued to break new highs. The storage sector paused briefly, then broke out again. Optical communication stocks consolidated and then came back strongly. In just a few months, many AI hardware stocks have doubled, and some have delivered several-fold gains. Many investors are probably asking the same questions. Is the AI hardware wave already peaking? What stocks could take over next? Which sector has the chance to continue this multi-bagger story? To capture the next sector rotation, we first need to understand what drives a stock's explosion in today's market. Look at Google Input-Output event on May 19. AI agents became a major part of Google's future direction. The rise of AI agents directly increased demand for CPU inference, and ARM, which can be viewed as the language rules of CPUs, surged close to 100% in just 10 days. At Computex, Jensen Huang once again moved the market. After his comments, Marvell rose more than 30% the next day. Behind these explosive moves is a clue the market is actively searching for. When physical limits start to hit the industry and traditional technologies reach their limits, what is the next sector with explosive potential? Today, we will break down the key investment logic after the AI hardware boom. Get ready to take notes, because this episode will give you a full framework for understanding what may come next. Before we begin, a quick reminder, everything in this video is for industry and business model discussion only. Any company names mentioned are used as examples for explanation. This is not investment, trading, or financial advice. Now, let's get into the main topic. First, we will use a simple 3-layer pyramid to simplify the AI value chain. Layer 1, AI hardware infrastructure. Layer 2, enterprise AI data and security infrastructure. Layer 3, AI applications. The main character of today's episode is not the first layer, which everyone already knows and which has already become a very crowded trade. It is also not the third layer, which has the biggest imagination and hype around applications. The focus today is on the second layer. Why focus on this layer? Since AI data and security infrastructure are critical to AI development, they can determine how quickly and how broadly AI can truly move from demos into real enterprise production. The problem is that most of the market's attention is still focused on the most visible stories: GPUs, chips, and computing power. By comparison, data management and security governance infrastructure receive less attention, and their valuations may not fully reflect their importance. In other words, I believe the market may not have fully priced in this layer yet. And this gap in market awareness is exactly what makes it worth paying close attention to. To help everyone understand how the AI value chain is connected, let's quickly explain what Layer 1, AI hardware infrastructure, actually includes. Most of the AI equipment you hear about in the news or on social media belongs to this first layer. GPUs, CPUs, HBM, DRAM, NAND, servers, networking equipment, cooling systems, power, rack integration, and so on. These are the foundations of AI. You do not need to be intimidated by words like GPU, CPU, HBM, or DRAM. We are investors, not engineers, so we do not need to understand every chip or every production line in full technical detail. You only need one simple picture. This layer is the concrete, steel, electricity, utilities, and cooling system used to build an AI factory. Without it, the AI factory cannot even be built. Companies in Layer 1 include Core AI compute chips, custom chips and high-speed connectivity, memory and storage, AI servers and full systems, data center networking, data center power and cooling. Over the past year or two, when Jensen Huang talks about AI factories, he is no longer just talking about putting more GPUs into data centers. At the recent NVIDIA GTC Taipei at Computex 2026, the idea went one step further. The future AI data center is no longer just a room that stores data and runs computation. It is a new kind of industrial infrastructure that can mass-produce AI tokens, AI agents, robotics capabilities, and enterprise productivity. In other words, the future AI data center will become a factory that produces intelligence. The raw materials are power, chips, and data. The outputs are AI's ability to answer questions, AI agents' ability to complete work for enterprises, and even robots' ability to execute tasks. But here comes the key point. After these AI factories are built, can AI immediately start working and help enterprises make money? Imagine this. I give you the most powerful AI computer in the world, filled with the latest NVIDIA GPUs and unbelievable computing power. But when AI is ready to operate at full speed, and the data I give is messy, inconsistent in format, outdated, duplicated, incomplete, or even contradictory, how much power can this super AI computer actually unlock? At that moment, it feels like sitting inside a Ferrari with 1,000 horsepower, only to be stuck in bumper-to-bumper traffic on LA's 405. The GPU is responsible for computation, but without high-quality data, even the most powerful GPU does not know what to compute. You could even say this: without data, even the most powerful GPU is just a pile of expensive scrap metal. The era of AI agents, robotics, and AI automation systems is arriving, but the real question is, are enterprise data systems ready? Where is enterprise data scattered? Is the data complete and clean? Could AI be reading incorrect information? Can sensitive data be safely used by AI? Who has access to the data? If data leaks or systems fail, how can the company back up and recover? If AI makes an incorrect decision, can the company trace the data source? From these questions, you can see that before AI can truly create enterprise value, there is an entire layer of data storage, access governance, security control, backup, and recovery infrastructure in the middle. That layer is the key focus of today's episode. Layer 2 of the AI value chain, enterprise AI data and security infrastructure. In summary, Layer 2 of the AI value chain, enterprise AI data and security infrastructure, can be divided into four major blocks from the inside out. 1. Storage and hybrid data infrastructure. 2. Data protection, backup, and recovery. 3. AI-ready data platforms. 4. Cybersecurity, identity, and access control. If these terms sound complicated or overwhelming, don't worry. Next, I will break them down one by one in the simplest way possible. These four blocks solve four core questions in AI data infrastructure. Where is the data stored? What happens if something goes wrong with the data? How does AI actually use the data? Who is allowed to access the data? Think of the entire AI system as a large factory. Storage platforms are the factory's warehouse. Data protection platforms are the factory's vault and disaster recovery center. AI-ready data platforms are the factory's logistics control center. Cybersecurity platforms are the factory's guards, access gates, identity checkpoints, and closed-circuit television system. Each of these has a different role, and all four are necessary. Imagine a factory that owns the most advanced machinery, but has nowhere to store raw materials, no ability to respond to accidents, no management system, and no access control. Can that company operate reliably? The same logic applies to AI systems. Next, I will go through these four blocks one by one, explain their value, the types of companies involved, and how they may benefit from the AI wave. Once you understand this framework, the next time you see the related product launch, company announcement, or AI concept, you will not simply think, oh look, another AI buzzword. Instead, you only need to ask, which problem is this company solving? Once you know the answer, you can clearly understand where it sits in the AI value chain and what its investment logic may be. The first block in Layer 2 is storage and hybrid data infrastructure. The storage we are talking about here is no longer the traditional SSD or hard drive business. It is the essential data infrastructure behind enterprise cloud, data centers, and AI development. For AI to operate, it must read data, and for data to be read, it needs a place to live first. The problem is that enterprise data accumulated over 10, 20, or even more years is never neatly stored in a single Excel spreadsheet. Instead, it comes in many types, at massive scale, and in messy formats: customer service conversations, contracts, financial records, design files, system logs, code repositories, and more. Even more importantly, this data is usually not concentrated in one place. Some of it sits in the company's own data center, some of it sits in the cloud, some of it is scattered across SaaS systems used by different departments. That is why storage infrastructure in the AI era is no longer just about finding a place to put data. It needs at least four core capabilities. First, capacity. Data volume in the AI era is growing at an incredible pace. Enterprise data can easily reach hundreds of terabytes or even petabytes. Without enough capacity, even the most powerful AI model has nothing to build on. Second, performance. GPUs are among the most expensive assets in AI infrastructure. But no matter how powerful a GPU is, if the data is not ready or moves too slowly, the GPU can only sit idle. Every second of waiting wastes extremely valuable computing resources. That is why high throughput, low latency, and fast data access are becoming increasingly important. Third, hybrid cloud support. Most enterprises cannot put all of their data on a single platform. Data often exists across on-premises systems, public cloud, and multi-cloud environments. So enterprises do not need just one storage product. They need a storage architecture that can operate across different environments. Fourth, reliability. AI training and AI inference often need to run continuously for long periods. If the underlying storage fails, the impact may extend beyond a single application and affect the entire AI workflow. High availability and fault tolerance are becoming basic requirements for enterprise AI data. If the GPU is the production line inside the AI factory, then storage is the large raw material warehouse behind the factory. All important enterprise data needs to be stored safely, reliably, and efficiently in this warehouse. The larger the warehouse, the more raw materials it can hold. The more efficient the warehouse, the faster the production line can get the materials it needs, the more reliable the warehouse, the lower the risk of the entire factory stopping operations. In the past, enterprises asked, where should we put the data? In the AI era, the question has evolved into, does the enterprise have a large, fast, and reliable enough data warehouse to support continuous AI operations? That is the real value of storage and hybrid data infrastructure in the AI era. NetApp is one of the most representative companies in this layer. As a leader in enterprise data storage and management, NetApp's core role in the AI era is to ensure that AI can access enterprise data quickly, safely, and reliably. To support large-scale AI workloads, NetApp has launched a data infrastructure designed for AI workloads. It has built deep partnerships with NVIDIA to support enterprise storage platforms for large-scale GPU computing. Dell is also an important player in this layer. Many people first think of PCs and servers when they hear Dell. But Dell also has multiple enterprise storage product lines, including PowerScale, ObjectScale, and PowerStore, and has long served large enterprises and data center markets. When we talk about this group of companies, remember this. They are not simply selling hard drives. They are selling the large data warehouses behind the AI factory. The larger, faster, and more reliable the warehouse, the more efficiently the AI factory can operate. The second block is data protection, backup, recovery. When many people hear data backup, their first reaction is, isn't it just copying data one more time? What is so special about that? But in the AI era, this has become much more important. As more enterprises begin using AI agents to handle customer service, order management, inventory planning, financial workflows, and other daily operational decisions, data becomes the most important foundation for AI systems decision-making. If the underlying data is lost due to ransomware, human error, system failure, or a cloud platform incident, the AI agent may immediately lose its data source, and the system could stop operating. If the data is polluted or tampered with, AI may even make wrong decisions based on incorrect information. At best, this affects operational efficiency. At worst, it can cause business disruption or major financial losses. Therefore, in the AI era, data protection, backup, and recovery are no longer routine IT chores. They have become risk management issues that determine whether an enterprise can continue operating and, in extreme cases, whether it can survive. If you think these risks are only theoretical, consider a real case. In 2024, Google Cloud experienced a major incident involving UniSuper, a large Australian pension fund with more than 615,000 members and more than 82 billion US dollars in assets under management. To improve system stability, UniSuper had migrated a large amount of its IT infrastructure to Google Cloud in 2023. But in May 2024, due to an internal mistake at Google Cloud, UniSuper's entire cloud subscription was accidentally deleted. Member login services and multiple core systems were disrupted. What ultimately saved the system was not Google Cloud itself. It was an independent backup stored on a third-party cloud platform. Since UniSuper had kept an independent copy in advance, it was eventually able to restore systems and services gradually. This case reveals an important reality. When an incident occurs, an enterprise needs more than just data backup. It needs data recovery. Even if the backup still exists, if it takes days or even weeks to locate the data, rebuild systems, and restore services, the enterprise can still incur significant losses. Every minute of downtime can mean lost revenue, lost customers, and damage to brand trust. You may ask, if data protection, backup, and recovery are so important, why can't enterprises just do it themselves? Why use specialized vendors? Modern enterprise data is increasingly large and distributed across different systems, regions, and cloud platforms. When an incident occurs, the company must not only find the data, but also confirm whether it was damaged or tampered with and which copy is the latest and most accurate. At the same time, it involves system rebuilding, cross-platform coordination, permission management, and disaster recovery. For most enterprises, building and maintaining these capabilities internally is expensive and technically difficult. That is why more enterprises choose specialized providers. These companies are not only selling data protection, backup, and recovery software, but also selling an enterprise's ability to recover and survive under worst-case scenarios. Example companies include Rubrik, Commvault, and Dell. Rubrik is one of the most representative companies in this field. It focuses on ransomware protection and immutable backup. Commvault focuses on enterprise-grade data protection solutions. In addition to traditional backup, it has increasingly emphasized data protection solutions for the AI era. Dell's PowerProtect and Data Domain can be viewed as enterprise data vaults. They are responsible for backing up, compressing, replicating, and recovering enterprise data, ensuring that even if systems fail, attacks occur, or an entire data center runs into problems, the enterprise can restore operations as quickly as possible. A simple way to remember this block is, these companies are the AI factory's vault and disaster recovery center. They ensure that when the factory faces a fire, a power outage, an accident, or an attack, it can still restart. Most of the time, people may not notice them, but when something truly goes wrong, they determine the enterprise's ability to survive. The third block is the AI-ready data platform, database, and pipeline. You can understand this as data governance platforms and data orchestration systems. If the first block solves the question, where is the data stored? And the second block solves the question, what happens if something goes wrong with the data? Then the third block solves the question, how does AI actually use the data? This may sound obvious, but for AI, the existence of data and its usability are two completely different things. Imagine a library with a massive collection of millions of valuable books. But if all the books are placed randomly, with no catalog, no classification, and no index, a researcher who walks in still cannot find the book they need. AI is the same. Inside an enterprise data warehouse, there may be huge amounts of data accumulated over 10, 20, or even more years. But the key questions are, does AI know where the data is? Can AI find the data? Does AI know which version is the latest? Does AI know which data is trustworthy and which is not? Does AI know whether it has permission to use this data? If these questions cannot be answered, even a massive enterprise data warehouse cannot create value. What an AI-ready data platform does is build a complete management system for this data warehouse. It integrates data scattered across the enterprise, builds unified catalogs, indexes, rules, and data relationships, and helps the company understand where the data came from, what changes it has gone through, which version it currently belongs to, and which people or systems have access to it. Ultimately, it turns messy, scattered, and hard-to-use data into information that AI can search, analyze, and reason over directly. In summary, storage is the warehouse where raw materials are kept. An AI-ready data platform is the warehouse's inventory management system, classification system, and logistics control center. In a traditional warehouse, the most important question was whether it could store enough goods. But in a modern smart warehouse, the more important question is whether it can quickly find the right item among thousands of products and deliver it to the right place when needed. AI-era data infrastructure works the same way. Enterprises do not only need to store more data, but also quickly find the right information within massive data sets and deliver it to AI models and agents in a safe, controlled, and traceable way. No matter how powerful AI is, if it cannot get the right data, it cannot truly deliver value. Although these companies have different product positions, they are all connected to the same broader question: how can AI use enterprise data? Take Snowflake as an example. Its core job is to help enterprises organize, govern, and manage data scattered across different systems, departments, and cloud platforms, so that AI can be built on top of managed data. Snowflake is not selling data capacity, it is selling data usability. Its latest results also show that more enterprises are building AI applications on top of governed enterprise data. Management has repeatedly mentioned that AI workloads continue to drive growth in platform data usage. This reflects an important trend. Oracle founder Larry Ellison has also emphasized in public discussions that the truly valuable data is not public internet data, but the enterprise data accumulated over many years inside each company. To turn that data into an asset that AI can use, enterprises need the infrastructure layer of AI-ready data platforms.
If you want to deepen your understanding of the stock market and learn more advanced trading concepts, we'd love to welcome you to JLo Stock Academy. JLo, the two-time US Investing Championship winner, after launching the Candlelists program, Master Trade, JLo introduced the English language program, JLo Stock Academy, to serve a broader global audience. Inside JLo Stock Academy, the core methodology breaks down championship-level trading system step by step. Weekly mock overview and tactical study updates demonstrate how a professional trader reads charts, identify alpha opportunities, and thinks through uncertainty in real time. Market alerts and mid reports provide timely insights to help you stay focused on what matters most in fast-changing markets. If you want to join JLo Stock Academy, click the link in the description and learn to trade like a champion.
The fourth block is cybersecurity, identity, and access control. After data has been stored, backed up, and classified, the next question is, who is allowed to access the data? In the AI era, this question becomes even more important. In the past, company systems were mainly accessed and operated by human employees. But in the AI era, more companies will allow AI agents to directly read data, execute tasks, and even complete certain work on employees' behalf. In a sense, an AI agent is like an employee whose capabilities have been amplified dramatically. It can work 24 hours a day. It can read large numbers of documents. It can send emails. It can log into enterprise systems. It can create tickets and submit requests. It can even modify settings and execute workflows. A normal employee may handle a dozen documents in a day. Still, an AI agent could scan thousands of documents, send hundreds of emails, and operate multiple systems at the same time within minutes. AI's greatest advantage is speed, but that same speed can also become its greatest risk. If an AI agent with broad permissions makes a mistake, is misused, or is taken over by an attacker, it could become an insider threat with far greater potential for damage than any single human employee. This is exactly why cybersecurity, identity, and access control exist. Using the AI factory analogy again, cybersecurity is the factory building security guards, access gates, employee badges, closed-circuit television, and security control room. These systems decide who can enter the factory, which areas can they enter, what data are they allowed to access, are there abnormal behaviors that must be blocked immediately? Before future AI agents enter core enterprise systems, they will almost certainly have to pass through this layer. Although these companies all operate in cybersecurity, they protect different areas. Cloudflare, for example, is like the security guard at the entrance of an enterprise website. It protects websites, APIs, and network traffic. When someone launches a DDoS or bot attack or tries to break into the system, Cloudflare stands at the front line. CrowdStrike is more like the internal head of security. It monitors employee devices, servers, and identity login behavior. When it detects suspicious activity such as stolen accounts, compromised devices, or abnormal program execution, it can alert the company or even automatically block the threat. In simple terms, without cybersecurity, identity authentication, and access control as safety guardrails, large enterprises cannot comfortably hand over real workflows to AI agents. No matter how smart AI becomes, if no one limits its permissions, the enterprise may not achieve higher efficiency. It may end up with security risks amplified many times over. That is why cybersecurity spending is generally more resilient than ordinary SaaS spending. Enterprises can delay customer relationship management, human resources, or collaboration software, but cybersecurity, firewalls, zero trust, and secure access service edge are usually not optional. Consequently, many cybersecurity companies can remain relatively strong even when the broader software sector is weak. After discussing the market narrative, I would summarize the investment logic in 4 points. After hardware is deployed, data and security are likely to become the next bottleneck. In the stock market, wherever the bottleneck appears, capital flows and valuation re-ratings often follow. For enterprise AI, the real source of differentiation is often not public internet data, but the private data that companies have accumulated over many years. Platforms that help enterprises organize, protect, and unlock the value of private data may become an important focus for future profits and valuations. Many Layer 2 companies are already high-quality SaaS or platform businesses with solid cash flow and strong customer stickiness. As more enterprises move AI from demos into real production, demand for data, infrastructure, security, governance, and monitoring tools should continue to grow. That gives these companies a clearer path to long-term recurring revenue. Layer 1 and Layer 3 stories are already widely discussed, but the Layer 2 narrative remains less crowded, leaving ample room for research. At this point, I also want to briefly invite everyone to imagine Layer 3, the layer where AI finally turns into real applications. This layer has the biggest imagination, but it also has the most uncertainty and is the hardest to forecast. The most intuitive question people ask is, how can AI help enterprises make money? For example, help sales teams follow up with customers, automatically reply to customer service requests, help marketing teams run ad campaigns and write copy, help engineering teams write code and handle tickets, help finance teams with approvals and reconciliations, help HR teams screen resumes. This layer can be broken down into many different business models and stock stories, but in today's video, I will not go through them one by one. For now, you don't need to focus on the details, rather, focus on the bigger picture. When Layer 3 applications become widely adopted, there will likely be a group of companies that stand to benefit significantly. Today, you only need to remember one idea. For Layer 3 to truly land, it must largely be built on top of Layer 2. Thus, Layer 2 is the critical bridge between Layer 1 hardware and Layer 3 applications. Finally, I want to make one broader point. As the AI industry develops, I increasingly believe that whether you are an investor or a trader, understanding market narratives is becoming more important. If you are not only doing ultra short-term trades that last a few minutes or a few hours, but instead want to trade turnarounds, medium-term trends, or hold positions for several weeks, several months, or even a year, you have to improve your ability to understand fundamentals and interpret information. At the very least, you need to understand what story the market is currently telling and which layer the next possible story may come from. I hope this video gives you a direction for thinking and encourages you to dig deeper and build your own independent judgment. Before we end today's video, I want to leave you with one question. Among the four major categories in Layer 2, storage, backup, and recovery, governed, AI-ready data platforms, and cybersecurity, identity, which one do you think will become the biggest bottleneck? Which companies are you most bullish on right now? Feel free to leave your thoughts in the comments below. Thanks for watching. I'm Jay Law. I'll see you in the next video.